Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Palantir Technologies, ticker symbol PLTR. And so for this stream, I will be broadcasting Palantir's webcast that we can see over here right next to Ed, their earnings report webcast. It is quite possible that there will be an issue with it because it's just as far as copyright purposes goes, they do have a little copyright thing on their video there. So hopefully there's no issue with that. This is really just kind of an experiment to see how that goes. And yeah, just seeing how the chart is, looks like the axis just bumped up a little bit because price is up just about 16% in the after hours. So it does seem like there's some good news going on with the company as far as their earnings report. As you can see here, Palantir surges after Q4 earnings results. Palantir stock pops on Q4 earnings, sees surging AI demand. So that's pretty excellent. We do know a lot about AI being a pretty big driver, a big force in the markets right now. And then also, let's see, other headlines. Palantir stock jumps as 2024 guidance tops estimates on commercial growth. So that's just great to hear that, the guidance, not only the earnings from last quarter, Q4 of 2023, not only do they appear to have been good, but also the guidance for the upcoming year is great. So that's good to hear. And I do see that a few people have joined. Welcome to the stream. Just got the 10-minute chart up here, over 19, up over 16% in the after hours. As you can see, I didn't adjust any of these lines. These are ones that I believe I've drawn on the day chart, on the daily charts. And yeah, we can see that we did, for the most part, respect this orange line over the course of the day. There was a pretty big pullback to it, so I was a little bit concerned about that. On the previous day, on February 2nd, price did go up to what looks like it was testing or attempting to test this 236 retracement at a price of $17.12. Did get a jump up in the off hours trading, the pre-market and after hours in pre-market. And then a pullback to retest this orange line. So I was a little concerned seeing that pullback, but respecting result. If before earnings we're up here and there's this level of support down here, or even this Fibonacci level, get a pullback, and that would not be good. But since we did come back down to this level that I've marked here, the orange line, this trend line, acting as support before earnings, we see this pop. So that's a pretty a good way to look at this. If we're at support before earnings, likely to go up. If we're below it, or below resistance, then likely to go down. But if in the middle ground, that's kind of tough to say. But yeah, so I've got to figure out the audio for connecting to their stream. So I am going to probably fumble with that a little bit. But I'm just going to leave the chart up here while I do that. Basically, when I stream, I like to make sure that I sound all right. But for this one, I'm going to want to be listening to Alex Karp and the team at Palantir for their earnings. So I'm going to disconnect there, and let me know in the chat if audio sounds good or bad, because I am still kind of learning how to do this type of thing. And it is quite possible, I had mentioned this earlier on, that there might be an issue with like copyright as far as the audio goes and stuff. So I might even try playing some music with it just to see if that, oops, I don't need to put an emoji there. All right, so that should be tuned into, let's see, the sound on Chrome. And I'm just going to test that a little bit with just the audio library. And so, and I can switch back to, having it full screen here, or a smaller screen if we want to be looking at the chart. So that is something that, we can be playing around with. But yeah, I've just got a list of some pop music. Some of this might be bad. I hope it's not. But yeah, let's see what seems I don't want to be searching. Let's see, flying. I'll click on flying. Maybe that's good. If that's too loud, and actually I got the... Yeah, so I can hear it in my headphones. I had set it at negative 30 decibars before, and that seemed to be good. So I'm just increasing this a little bit. Let me know if this is too loud. This is really just kind of sound experiment while we get ready for the webcast to start. But yeah, so hopefully that's good. I see sound coming through in Chrome, which is the little window that I have, and actually, what I might do, 5 decibels less loud, cool. What I might do is actually, it's really loud in my headphones. I have it down as low as possible, so what I might do is adjust the sound here to like half. And then I might actually leave it where it's at. Hopefully that sounds okay with me. And I should say, hey Nameless, what's up? Nice to see you here. So I did lower the volume. I guess you can see the little knob right there. I cut that down by half, and I left it at 30 decibars because I assume that we're going to want to be listening to the webcast more so than the music. And so hopefully the music's a little too quiet now. But yeah, this song's called Flying because the stock price is flying. I don't necessarily like the song though. But actually, I might lower that a little bit more because it's just too loud in my ears. So that should be... Hopefully that's good. And we got about 7 minutes before the webcast starts. And so yeah, I've got that here. And I might just keep the chart behind us so we can see all of that. Perfect. Awesome. Thanks for letting me know. And then once the webcast starts, this is all the same audio feed. I'll turn the music off, and if it needs to be adjusted, I should be able to do that no problem. And I'm actually going to take the sweater off. It's so funny, I get cold waiting for things, but then when I start moving around, I get hot. So just 1 second. All right, and I have to say, this is pretty exciting, seeing it pop like this. Yeah, I feel bad. I put that head and shoulders pattern on that thumbnail. But if we look at this on the daily, I just saw this little pattern here, and I got a little nervous. And really just around earnings, things can be a little precarious. Oh, what's going on now? What's this wick doing here? That was a buy the dip opportunity maybe, or that's foreshadowing what is to come. Still, yeah, 19. I was expecting 18. I got this alert here. I was expecting that to act as some resistance because yeah, because it did well, let's see. It did right here. But yeah, I think that we're going to have a pretty nice new retracement to look out after this. And I think we could actually, I'm going to gray some of these out so we have a little bit more guidance. And I do know there's just about 5 minutes before it. So I will be swapping over to to the webcast in a minute. But yeah, let's see. So from this, we can assume that the top is in here. This is the top. This is the low. And then from this, we could see where price might go. So I'm just going to make sure this is to the penny. I just prefer that. Oh, and actually, the low is not there. It's over here. And so from this retracement, maybe we can get an idea of where price might be going. 1978. And let's see, I'm also going to add this just in case it goes crazy. That would be 2210. But yeah, 1978. Let's see. And I'll put this back on the 10-minute chart. I might actually switch to the 5-minute. Almost getting up to that fib level. Actually, I'm going to do the 10-minute. And I am going to turn off this music and make sure I'm connected to that. Let's see. Yeah, I might leave this on, not full screen, but I'm going to turn this music off. And I'm going to star this one. Maybe that'll pop up in a stream later on. And yeah, okay, cool. So I don't think I need to be notified on that because it's right there. But yeah, 1950 in the after hours, looking pretty good. But I'm very curious about this big wick down. So Palantir, I got these little news article things that pop up. Just going to look at those. Palantir forecasts strong 2024 profit on robust AI demand and shares jump. AI is just like the dominating thing right now. Palantir forecasts strong 2024 profit. Yep, okay. And then Palantir gains on strong 2024 profit forecast. Reports its fourth quarter from 2023 earnings. EPS of 0.08 versus IBES estimate of 0.08. So this is stuff that I need to learn more about. I'm not too familiar with earnings and things like that and these reports. So hopefully we can be learning together via the live chat on this. But yeah, it looks like it's 1950 in the after hours, up over 16%, about 16.5%. And I'm surprised. Last earnings, it went up 20%. It seems like it might be another one of those. However, when this webcast starts, this could reverse. Who knows? But I do think that Fibonacci retracement that I had just done with the extension going up to 1978, just below $20, the yellow line there. It's pretty cool. I've been a fan of Fibonacci retracements lately, and I wonder if we could be topping this all-time high, 52-week high of 2185. I wonder if we'll be going up to 2210. And so that could be pretty interesting to see. But yeah, I'm just going to switch this back to the 10-minute chart. We got a few days on there. And let's see. Man, this crazy wick down. This is a buying opportunity right here, maybe. Or that's foreshadowing what's going to happen. Or it's just an error. And, oh, crap. I think that might be starting. So it should be live there. Oh, and I've got my computer audio. Yep, it's in my ear. So if there is an issue with this, just let me know. I might keep that small. And then hopefully there's no issue with YouTube and me streaming another stream, but we'll have to see. Hey, Chase, what's up? Finally, someone who isn't crazy. Thanks for clarifying that. Crazy loud or talks too fast. Glad I don't talk too fast.
Good afternoon. I'm Anna Saro from Palantir. Palantir's finance team, and I'd like to welcome you to our fourth quarter 2023.
Let's listen up.
We'll be discussing the results announced in our press release
And
issued after the
and
market
I might
closed.
interject a little bit just because I'm a little worried about getting a copyright strike. But this is an experiment. We'll see how it goes.
Considered forward-looking within applicable securities laws, including statements regarding our first quarter and fiscal 2024 results, management's expectations.
Not too exciting. This is just like legal stuff.
Performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks
Sorry, I got it
is available
screwed
in our
up
earnings
here.
press release, distributed after the market closed today, and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website.
Still up 1975, looking good.
During
18%.
the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
2023 was a tremendous year of opportunity and growth for our company, with U.S. commercial at the forefront, which was meaningfully driven by AIP as the product and boot camps as the go-to-market motion. We closed out the year with $608 million in fourth quarter revenue, representing 20% year-over-year and 9% sequential growth. Our commercial business surpassed $1 billion in revenue over the last 12 months, a noteworthy milestone. And our fourth quarter commercial revenue grew 32% year-over-year. AIP and boot camps are accelerating our business, particularly in U.S. commercial, where fourth quarter revenue grew 70% year-over-year, evidencing a significantly expanding addressable market. In October, we set a goal of executing 500 AIP boot camps within 1 year. We have already blown that goal out of the water, having completed more than 560 boot camps across 465 organizations to date. We are deploying AIP to implement hundreds of real, tangible use cases in production for our customers. One boot camp attendee remarked, quote, "What your team did in just 2 days was incredible. We can already think of 100 use cases for this." While another said, quote, "It seems there are endless solutions. It seems there's nothing Palantir cannot do." When combining LLMs with Foundry through AIP, the ability to deploy use cases becomes much more widely accessible, so the addressable market expands considerably. We're seeing initial momentum as a result of that expansion, while also still being at the starting line in the journey to capture that market. In our U.S. commercial business, the expanding addressable market driven by AIP is propelling growth both through new customer acquisitions and expansions with existing customers. I've never before seen the level of customer enthusiasm and demand that we are currently seeing from AIP in U.S. commercial. With regard to new customer acquisition, the expanding addressable market is reflected in the greater scale of the top of our sales funnel. And now we're doubling down on how we're converting boot camps to enterprise deals. We're already seeing evidence of boot camps helping to significantly compress sales cycles and accelerate the rate of new customer acquisition, which rose to 22% sequentially for U.S. commercial in Q4 versus 12% and 4% in Q3 and Q2, respectively. And we more than doubled the number of U.S. commercial deals with TCV of $1 million or more from the fourth quarter in 2022 to 2023. We're also seeing a meaningful increase in our U.S. commercial TCV on a dollar-weighted duration basis, which is up 107% year-over-year and 42% sequentially. We signed a multitude of U.S. commercial deals last quarter. Just to name a few, we signed deals over $25 million each with one of the largest car rental companies, one of the largest telecommunication companies, and one of the largest pharmaceutical and biotechnology corporations in the world. And then we also signed deals over $10 million each with an American consumer packaged goods holding company, an American automotive seat and electrical systems manufacturer, a comprehensive health network in the Midwest, and a large-scale battery manufacturer. In addition, we signed deals over $5 million each with an American bank holding company, a horse racing regulatory organization, one of the world's largest equipment rental companies, and one of the largest independent nonprofit cooperatives in the quick service restaurant industry. And these are just a few of the examples. Out of these deals, we're seeing several archetypes emerge as a result of AIP. First is the new customer who attends a bootcamp and signs an enterprise contract shortly after. For instance, an American cable television provider signed a nearly $3 million deal following cold outreach on LinkedIn that led to a 5-day bootcamp, then an enterprise agreement, all in the span of last quarter. Then there's AIP-driven conversions of ongoing pilots. Following a 2-year prospecting effort, a large American consumer packaged goods holding company agreed to a pilot, during which AIP was also introduced, then converted in December to a 5-year, $19 million contract. Then also, there's AIP-driven expansions in key existing accounts, including one of the world's largest telecommunication companies, where we demonstrated speed to value at bootcamps by delivering new use cases on top of the existing ontology in as little as 24 hours, with the results contributing to an agreement for a multi-million-dollar expansion of our existing contract. Within our international commercial business, AIP is solidifying our long-standing partnerships with existing customers, particularly in continental Europe, while also driving pockets of growth in select markets. This includes the renewal of our long-standing partnership with Novartis, a 5-year renewal with one of the largest European vehicle manufacturers, and a 5-year renewal of our partnership with Swiss Re. In addition to bootcamps, we are deepening distribution channels to more rapidly seize opportunities in certain regions, including Japan. In Q4, we expanded and extended our partnership with Fujitsu to enable them to bring AIP and data integration capabilities to their global client base. We also signed an expansion with Sampo Care to enable delivery of their real data platform to nursing homes and elder care facilities. Both of these reflected a culmination of months-long efforts prior to deal closing. In our government business, we are actively engaged across all theaters of crisis and conflict. The strength of our U.S. government business is not reflected in the fourth quarter results, which remain muted. Some of this is due to the continuing resolution and timing of large potential contract awards. But it's also a function of the department's pace of scaling their AI and software efforts to match the realities of modern combat, particularly with JADC2. The department is responding to great power competition by ramping up investments in America's unique strength, software. We are focused on deploying on the battlefield and in large programs related to JADC2, combined with our rollout of Mission Manager and the First Breakfast initiatives, which is driving innovation in our engagement model with the government and the defense industrial base. The Army has publicly indicated they anticipate down selection to a single vendor for the next phase of Titan to occur in Q2 of 2024. We also announced the extension of our partnership with the Army to continue operating and enhancing the Army Vantage platform, which is used for data-driven operations and decision-making. We will continue to onboard partners and demonstrate the value of Mission Manager during this option year to deliver on the Army's multi-vendor ecosystem vision. On the strength of our work on the ground and our software that actually works, we expect re-acceleration of our U.S. government business in 2024. Conventional wisdom is that government acquisitions are slow, and that you need to invest in the programs that the government is buying in a 2 to 3 year acquisition cycle. And that's what programs like CD1, AIDP, Vantage, and Titan look like. But our business has also been driven by urgent acquisitions to meet emergent needs that we predicted and invested in years ahead of time. As the U.S. confronts conflict in 3 theaters, and as all services seek rapid capabilities to meet those moments, we see substantial opportunity across the department. Turning to our international government business, we are incredibly honored that the NHS chose Palantir to help deliver a federated data platform, awarding us a consumption-based contract with £330 million allocated to improve patient care by bringing together the information needed to plan and deliver care while reducing administrative burden. Over the past few years, an increasing number of NHS trusts have used the software to reduce the care backlog. For example, at Chelsea and Westminster NHS Foundation Trust, it helped bring down the inpatient waiting list by 28%, and operations canceled on the day due to missed preoperative assessments subsequently fell by half. In the fourth quarter, we also received funding from a partner nation related to our ongoing efforts in Eastern Europe, which had a substantial impact on our international government results. Recent world events and global conflicts illustrate the utmost importance of Palantir's mission. It's our duty to uphold our founding principles through our continued dedication to our allies in the midst of current events. We don't take this lightly. Last month, we held our board meeting in Tel Aviv, where I saw firsthand our commitment to and support for Israel. While there, we were proud to announce our strategic partnership to supply the Israeli Defense Ministry with technology to aid in addressing the current situation in Israel. My experience there was a humbling reminder of the role we play and the responsibility that we hold. Reflecting on 2023, we feel immense pride in the missions we are supporting and in our role shepherding our customers through the ongoing transformation of their enterprises with AIP. This ongoing transformation isn't just limited to our customers. I'm proud of the incredible transformation of our enterprise in 2023, and I'm excited about what it will bring in 2024 as we conquer the expanding market. I'll now turn it over to Sean.
Thanks, Ryan. As Ryan mentioned, the expanding addressable market.
This all sounds pre-recorded.
Compelling growth both through new customer acquisitions and expansions with existing customers. We continue to focus on accelerating the rate of boot camps with current and prospective customers. From customer feedback, the AI platform meets this moment like none other. AI has radically recalibrated customer expectations for software. Expectations that AIP and Foundry exceed by enabling the elegant integration of humans, software, and AI to deliver operational outcomes quickly. We are focused on the end-to-end problem of value creation, not a small, narrow technical slice. Accordingly, our platforms focus on tools, not tuning, on transforming business processes, not seeking iotas of insight. AIP is the AI-powered operating system for the enterprise, not a Q&A bot, not an agent framework, not a way to dabble, but a way to deliver. At a recent 2-day bootcamp with a construction, engineering, and architecture company, our customer developed a production-ready use case that provided $10 million of savings. They used AIP to build an AI-powered disruption manager application that processes production disruption notifications through AIP logic to determine what the best new production plan would be. AIP, wielding a linear optimizer as a tool and using LLMs to parameterize and contextualize the disruption, translates the notification to a clear understanding of impact on the optimized schedule. AIP Logic and AIP Automate then rerun the optimizer to generate opportunities to respond to the disruption. 2 days, $10 million. We've covered nearly 200 use cases coming out of all these boot camps, and we are just getting started. The core theory of value that has driven our product strategy for time eternal is data integration. That bringing new data into an operationally relevant context to expand the complexity, nuance, and surface area of decision-making always produces value. AIP enables us to integrate so many types of new data: video conferences, incident response calls, Slack rooms, PDFs, images, video, audio, and exploit them through the power of LLMs and ontology. So much of what data defines a process is not actually in the system that runs that process, but instead in conversations, conference calls, videos of the factory floor, or images of a site. What's in the enterprise process system is a lossy, latent representation of this reality. Our software always exploited that phenomenon, that the truth is out there, not in your ERP system or that blessed application. With AIP, we are investing in multimodal approaches to compound on this proven value driver and expand the addressable market of use cases within the enterprise. As I've said before, with AI and LLMs, you can't think your way through it. You have to get your hands dirty and work in anger to get use cases into production. In AIP, we have built a platform to deliver proof, not just proofs of concept, to our customers. And boot camps are the way to flex that strength. At AIPCon 3, we'll have many customers on stage showing you their great work. Come taste the pudding. Turning to government, Palantir is experiencing its own Amazon.com to AWS moment, taking exquisite first-party technology that supports the largest scale defense tech player and making it available for third parties to build on and with. Gotham, Gaia, Meta Constellation, this is our software. Less well understood and now being commercialized is our software infrastructure, platforms like Apollo, the capabilities that we had to build over 20 years to enable hundreds of dev teams to independently release 2,500 products and services to nearly 1,000 customer environments, including about 100 air-gapped environments, delivering 90,000 upgrades a week. This infrastructure abstracts away supply chain security, environment heterogeneity, and infrastructure so that developers can be operationally responsible for their services across it all, so they can focus on delivering innovation to the warfighter. And that's exactly why the Palantir Government Web Services offering is so compelling. $100 billion has been invested by venture capitalists into defense tech since 2021. These companies want to compete on quality, not beating back bureaucracy. Government Web Services creates a capital and time-efficient way to unlock market access for new entrants and incumbents alike. But even beyond defense tech companies, an extended set of these capabilities that we call Mission Manager are uniquely suited to delivering the capabilities that we have heard all government PMs asking for. Program offices want to pursue multi-vendor, big tent ecosystem acquisition strategies with government-owned and managed interfaces. The typical way to pursue this is with a systems integrator, where they are managing the integration with billable hours, constrained by humans. At Palantir, we do this with software as a software integrator. We see a more significant market opportunity in Mission Manager and Government Web Services over the long term than in C2, Intel, and data platforms alone. We have already launched Mission Manager projects, starting with the US Army, a customer whose needs and feedback have heavily shaped this offering. We continue to invest in relationships with the defense industrial base to help them bend metal more profitably and efficiently. In their earnings calls, America's prime signal that they're pulling back from getting substantially burned on firm fixed price contracts. This is a giant step in the wrong direction for America. So we want to lean in and help them optimize their supply chains, their production plants, quality, and overall delivery against these contracts that have enormous opportunity to generate margin for them. But we are also working aggressively with new entrants to start with Foundry as their production software from day zero. M-Day was yesterday. We have no time to waste to mobilize America's industrial base to ramp production. Finally, our products could not be playing a more central role for real-world events. Our AI-enabled platforms are being leveraged maximally to support key U.S. government goals in the Middle East. We have surged support to Israel to enable the Israeli Defense Forces and intelligence services to leverage Gaia, Gotham, Foundry, and AIP to tackle a growing list of use cases from tactical command and control, visual intelligence, forensics, readiness, and production. At the same time, great power competition with China remains top of mind as we continue to invest in moving more of Palantir's mass west of the international date line. And we continue to support Ukraine's efforts directly and through allies. When the bat signal goes up, Palantir's Gotham platform and its family of products have always answered the call. At the same time, monetization of these efforts will take time. The principal reason is that the DoD is at the very beginning of a long-term allocation shift from hardware to software. For example, the Army is spending a mere 0.015% of its budget on command and control software in fiscal year 24. But as we confront crisis and conflict in 3 theaters, this is changing. Growth is being driven by the incredible dynamism of the U.S. commercial market, and U.S. government will follow. With that, I'll hand it over to Dave to talk us through the financials.
Thanks, Shyam. We had an exceptionally strong fourth quarter, marked by our outperformance across revenue, profitability, and cash flow. Revenue growth accelerated to 20% year over year in Q4 on the back of our U.S. commercial business, which alone grew 70% year over year, a result driven by our momentum in AIP. Adjusted operating margin continued to expand to 34% in the fourth quarter, highlighting the strong unit economics of our business. We beat the high end of our guidance range on both revenue and adjusted operating margin, driving an 800 basis point sequential increase to our Rule of 40 score from 46 in the third quarter to 54 in the fourth quarter. We also delivered our 5th consecutive quarter of GAAP profitability. In 2023, we generated $210 million of GAAP net income, a $584 million increase from 2022. In the fourth quarter alone, we generated nearly $100 million in GAAP net income. We also delivered our 4th consecutive quarter of GAAP operating profit, generating $120 million of GAAP operating income in 2023, a $281 million increase year over year. Our GAAP operating profit accelerated in each quarter of last year, and in the fourth quarter alone, GAAP operating income increased 65% sequentially to $66 million, our highest quarter ever of GAAP operating income. We generated over $300 million in adjusted free cash flow in the fourth quarter, representing a margin of 50%, and over $730 million of adjusted free cash flow for the full year. Turning to our global top-line results. Fourth quarter revenue accelerated to $608 million, up 20% year over year and 9% sequentially. We generated $2.23 billion of revenue in 2023, representing a growth rate of 17% year over year. We generated $1.38 billion in total U.S. revenue in 2023, representing a growth rate of 19% year over year. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 20% year over year and 8% sequentially, and full year revenue grew 20% year over year. Customer count grew 35% year over year and 10% sequentially to 497 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 11% year over year to $55 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 32% year over year and 13% sequentially to $284 million. Full year commercial revenue grew 20% year over year to over $1 billion, surpassing the billion-dollar mark for the first time. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 35% year over year and 12% sequentially, and full year commercial revenue grew 28% year over year. Fourth quarter commercial TCV book was $699 million, our highest commercial TCV quarter in the company's history, representing 156% growth year over year and 74% growth sequentially. Last quarter, our U.S. commercial business saw rapid acceleration and unprecedented demand. Fourth quarter U.S. commercial revenue grew 70% year over year and 12% sequentially to $131 million. Full year U.S. commercial revenue grew 36% year over year to $457 million. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 71% year over year and 8% sequentially, and full year U.S. commercial revenue grew 52% year over year. Our momentum in AIP is driving both new customer conversions and existing customer expansions. The transformation that AIP is having on our business is best highlighted in our U.S. commercial bookings and backlog. In the fourth quarter, we booked $343 million of U.S. commercial TCV, representing 107% growth year over year on a dollar-weighted duration basis. Total remaining deal value in our U.S. commercial business grew 32% year over year and 28% sequentially. Our U.S. commercial customer count grew to 221 customers, reflecting 55% growth year over year and 22% growth sequentially. Fourth quarter international commercial revenue grew 11% year over year and 14% sequentially to $154 million as we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. As Ryan mentioned, we've been capturing value and footprint from AIP momentum, and two examples are from our work with Fujitsu and Sompo. These customers have been using AIP for months prior to the deal's closing, resulting in some revenue catch-up last quarter. Full year international commercial revenue grew 9% year over year to $546 million. Revenue from strategic commercial contracts was $20 million for the quarter. We anticipate first quarter 2024 revenue from these customers to decline to between $14 to $16 million, compared to $33 million in the first quarter of 2023. We anticipate 2024 revenue from these customers to decline to approximately 2% of full year revenue, compared to approximately 4% of revenue in 2023. Shifting to our government segment. Fourth quarter government revenue grew 11% year over year and 5% sequentially to $324 million. Full year government revenue grew 14% year over year to $1.22 billion. Fourth quarter U.S. government revenue grew 6% year over year and 3% sequentially to $237 million. Full year U.S. government revenue grew 11% year over year to $921 million. As Ryan mentioned, While our fourth quarter U.S. government results are muted due to the timing of larger contract awards, we expect our U.S. government business to re-accelerate in 2024. Fourth quarter international government revenue grew 27% year over year and 11% sequentially to $87 million, bolstered by our work in healthcare and defense. This included the receipt of funding from a partner nation related to our ongoing efforts in Eastern Europe, which resulted in a revenue catch-up for the quarter. Full-year international government revenue grew 23% year over year to $301 million. We had an outstanding quarter of bookings. Fourth quarter TCV booked was $1.15 billion, up 192% year over year and 38% sequentially. Net dollar retention was 108%, an increase of 100 basis points from last quarter. Net dollar retention does not include revenue from new customers that we acquired in the past 12 months and therefore does not yet fully capture the acceleration in our U.S. commercial business. We ended the fourth quarter with $3.9 billion in total remaining deal value, an increase of 5% sequentially, and $1.2 billion in remaining performance obligations, an increase of 28% year over year and 26% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 84% for the quarter and 82% for the year. Adjusted income for operations, which excludes stock-based compensation expense and related employer payroll taxes, was $209 million, representing an adjusted operating margin of 34% and marking the fifth consecutive quarter of expanding adjusted operating margins. Full-year adjusted income for operations was $633 million, representing a margin of 28% and 600 basis point increase compared to 2022. Q4 adjusted expense was $399 million, up 1% sequentially and up 1% year over year. Full-year adjusted expense was $1.6 billion, up 7% year over year. Our bottom line outperformance in 2023 has positioned us to be able to escalate investment and resources to AIP. As a result, we expect expenses to increase in Q1, but remain focused on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and operating income. In the fourth quarter, we generated GAAP operating income of $66 million, representing an 11% margin, our fourth consecutive quarter of GAAP operating income. Full-year GAAP operating income was $120 million. We generated fourth quarter GAAP net income of $93 million, representing a 15% margin, our fifth consecutive quarter of GAAP profitability. Full-year GAAP net income was $210 million. Fourth quarter adjusted earnings per share was 8 cents, and GAAP earnings per share was 4 cents. Full-year adjusted earnings per share was 25 cents, and GAAP earnings per share was 9 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 54% in the fourth quarter, an 800 basis point increase to our Rule of 40 score from the prior quarter. We continue to strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the fourth quarter, we generated $301 million in cash from operations and $305 million in adjusted free cash flow, both representing a margin of 50%. In 2023, we generated $712 million in cash flow from operations and $731 million in adjusted free cash flow. We ended Q4 with $3.7 billion in cash, cash equivalents, and short-term U.S. Treasury securities. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn. Now turning to our outlook. For Q1 2024, we expect revenue of between $612 and $616 million, adjusted income from operations of between $196 and $200 million. For full year 2024, we expect revenue of between $2.652 and $2.668 billion, U.S. commercial revenue in excess of $640 million, representing a growth rate of at least 40%, adjusted income from operations of between $834 and $850 million, adjusted free cash flow of between $800 million and $1 billion, GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our earnings. There's really so much to say. Obviously, our performance in U.S. commercial is extraordinary. Some would say bombastic. The numbers that just fly off the screen are the 70% year-on-year growth in Q4. The numbers that I almost had to turn the page when I saw them were the over 100 contracts over $1 million, 37 over 5, and 21 roughly over $10 million. It's almost inconceivable to do that many contracts given the way our product used to be. And so what you see is a convergence of our product being easier to use, an augmentation of its charisma, both driven by developments in AI, large language models, which make the product approachable foundry to the broader market. You also see just this enormous demand and our ability to meet that demand with a new piloting approach that we call boot camp. So we went 2 years ago we did 92 pilots. And last year, really mostly the second half of the year, we did over 500 boot camps. I go around the country now telling CEOs, CTOs, and really whoever has $1 million to buy our product and transform their enterprise, take everything you've done in AI since you started, put your best people on it, and we're going to show up at any time you want, and we're going to run your data at a boot camp for 10 hours. And then you compare your self-pleasuring to our operationally relevant, commercially valuable, critical to your enterprise results. Our 10 hours, your 10 months. Any products you want, any vendor you want, any hyperscaler you want, you pick them, we'll show up. The reaction to this, because what America is obviously realized is this is real. But if you took the total number of people, total number of enterprises that are doing AI of any kind, including algebra, and said it would be probably less than the 300. We have 300 customers that are creating operational results using our AIP product. Operational meaning, define it how you want. I'm defining it as they'll pay $1 million or more for it. So it's real. And we're doing this at a scale and pace that is inconceivable for Palantir up until recently. And you just have number after number after number, interface after interface. There are some caveats. Europe has decided that they are not going to engage in this revolution. There are other caveats for our society. I don't want to spend too much time on that, but the winners are going to win more. This is a revolution for incumbents that have distribution and already strong products, which is why we're massively outperforming. There's some caveats for us internally. We're having to rebuild the whole system, our whole company, to deal with this demand. We have a latent, nascent sales force that has put its tiny toe in the water and has noticed it can move around. We have to build that into a strong, aggressive machine. There's some positive caveats. We're doing this our way. We are proud of our work on the front. We are proud that we support the U.S. We are proud that we support the U.S. military. We are proud to have an operational, crucial role in Ukraine. And I am exceedingly proud that after October 7th, within weeks, we are on the ground, and we are involved in operationally crucial operations in Israel. I know of no other software company in the world that has been engaged by Ukraine and Israel, or in general, I'm not sure have bought software from any other company at our scale. But these are momentous events built on the back of a 20-year assumption that software would define our reality. The winners would be those that understood software, rejecting linear, narrow, sales-driven software, Frankenstein monster infrastructures that have been so historically popular for investment in Silicon Valley, rejecting sophism as not only a approach to business, meaning I only say what I believe if it doesn't matter, or I never say what I believe. Those assumptions have seeped into our products, whether they're a military product or their foundry or ontology or AIP. They also, by the way, for those listening who think our strategy is crazy, many of your best people are applying to Palantir now. So while we may be crazy, we are being bombarded by people who want to work at this company. Bombarded. I cannot.
Innovators are always crazy.
Not go by where I'm not getting a call, an email.
Crazy.
50 attempts to get into our company. We are white hot in recruiting. We're a 20-year company with the strongest recruiting I've ever seen from a company that's historically had the strongest recruiting and the most competitive environment in the world, Silicon Valley. That is because we stand behind our values and because we intend to win with those values, which we're proving. So this was an extraordinary last year. We also took care of making sure we're aligned internally on comp. We are streamlining our events, the way we go to market. And I would also say from the perspective as the leader of our movement, nominally called the CEO of our company, we have never been this aligned internally. We are a company that engages the most talented, interesting, and difficult people in the world. Some of them are at this table. And there has never been a time where we have been this motivated, this in unison, and this proud of our company and our accomplishments. And so I'm proud to be proud with them, and we are going to keep on our efforts, and I foresee a very, very strong year, especially in U.S. commercial. I would also say the strength of our U.S. commercial and the strength of our products being used in the most difficult and most important war zones in the world is going to have a handoff function into USG, and I'm optimistic that handoff function will happen, and we will be as successful there as we are in USCOM.
With that, we'll begin with a few questions from our shareholders before we open up the call. Our first question is from Andrew. Given the significant increase in demand for AIP, could the management team elaborate on the advancements made in formulating monetization strategy for these offerings?
Yeah, you're right to comment. The demand is off the charts for AIP, with boot camps as the delivery mechanism for AIP, and we're seeing AIP drive the expanding addressable market that we're seeing. As Alex commented, we closed 103 deals in Q4 alone, over $1 million. Having been involved in many of those directly and on the ground, I can tell you that the feeling, the demand, the excitement over AIP and over Palantir is unlike anything I've seen in the 14 years I've been here, and we feel that. We feel that in a tangible way on the ground with our customers, and we're starting to see the beginnings of that in our Q4 results. In October, we set the goal of executing 500 boot camps for top of funnel for AIP. As noted, we've already exceeded that with over 560 boot camps just about 4 months later, and that is only continuing to increase that momentum. Then you see the results in U.S. commercial, 70% year-over-year growth in revenue in Q4, 55% growth in customer count year-over-year, 107% growth in TCV closed on an adjusted basis. And then you see emerging from that the archetypes to the question of monetization, the archetypes of the types of monetization we're seeing. Either it's boot camps that are quickly converting to paying customers, or it's expansion of existing customers, or it's customers where maybe we've been engaged for a while, and with the introduction of AIP, that whole process has been accelerated. We're seeing that across the board, and yet at the same time, we've barely touched that addressable market, and we're really only at the beginning. So excited to see where that takes us.
Thanks, Ryan. Our next question is from Tanner, who asks, what kind of interest has the FedStart program seen as of late? Has the market responded to this, and will there be additional marketing made towards these startups? And relatedly, when do you expect Apollo to be a significant contributor to Palantir's revenue?
Great, thanks, Tanner. Yeah, FedStart's been a hit, and I think it's easy to understand why. There's been $100 billion of capital that's flowed into the defense tech community at large. No one can afford the 2 years and $2 million it takes to achieve this accreditation. This provides market access. We've started with an intense focus on IL5, bringing folks to the DoD market. We plan to release an IL6 FedStart at the end of Q2 and FedRAMP High at the end of Q3, early Q4. And we're also going to be taking this to our allies. So we intend to launch FedStart with the UK on the secret network and above top secret network later this year. Apollo is having its moment. I think it's the charisma it has with customers when they see it running at scale, managing all $2.2 billion of our revenue. I think a big part of this is they've spent the last 2 years trying to solve these problems on their own, and then viscerally understand how much value it can contribute to them, how much it can accelerate them, both on the government program side, but also on the company side, where companies are struggling with how to efficiently deliver modern software into these environments. But I think that the bigger thing that I'm really excited about is Mission Manager, which is Apollo, Rubix, which is our zero trust compute and networking infrastructure, and the Ontology software development kit, the OSDK, as a combined offering to the government to really give the government what they've been asking for, which is infrastructure that allows them to build and manage multi-vendor, big tent ecosystems that drive continuous competition and allow the government to actually control the interfaces and avoid lock-in. And so you can think of FedStart as actually the first product that we've launched on top of Mission Manager infrastructure. We've started doing other projects, including Army C2 work, but that's going to be a very exciting trend for us.
Let me just give an addendum here. Sham launched and built FedStart, but but one of the most important things it did is before we launched FedStart, the $100 billion of investment in kind of new defense tech largely had the impression Palantir was competitive with them. And we weren't competitive with them. And FedStart aligns all those venture capitalists and all their investments and most of their companies with Palantir, because we can allow them to get onto classified networks much quicker so that they can actually show results to their investors much quicker. And that means a lot of the resistance to us is not only disappearing, but it's actually been converted into support for Palantir, support for what we're doing. And those people are really helping spread the obvious Palantir gospel. Instead of wondering how they can compete with us, they're wondering how we can succeed together.
Thank you both. Our next question is from Keith. Is your greatest competitor still your potential customer's own IT department, or has that changed?
Thanks, Keith. We certainly used to feel that way, but when you look at boot camps, you look at how much charisma AIP has with IT, and the fact that we're winning with IT, with Apollo, with the OSDK, with capabilities like Marketplace, that's certainly not the case anymore. IT has become some of our biggest champions. And I think what that's revealed for us is that perhaps the issue was never actually IT. It was this software industrial complex. Everything Alex was talking about earlier, these thin products that were really designed to sell, and they're more like a drug than they are like medicine. And this sort of strict adherence to architectural conformity. But what I think is exciting about Gen AI is it's blown up all of that. You know, it's been a big reset button here. The whole map, the whole architecture is up for grabs, and we're working very closely with IT to write that map, to write the architecture that is actually delivering all these operational use cases for these customers.
Now, one of the coolest things about going to these meetings is it used to be 3-4 years ago, you could predict who was going to like us and who wasn't, and it's just not anymore. You go to these meetings and there'll often be the IT person telling the CEO, like, look, we have no choice. We need to install this quickly. And so there's a cultural shift in the U.S. I don't think it's outside the U.S. the case, but inside the U.S., people in IT are responsible for business value. This creates business value. And they're often responsible for global business value. They're not that interested in putting together a PowerPoint and showing how that could work in theory. They've got to show themselves, their company, their workers, the whole, that they're going to get actual revenue, either driving or quality of revenue driving results quickly. And they are almost exclusively now our friends. Maybe they can talk to some analysts. Like, we can convert you guys too.
Thanks. Our next question is from Mariana with Bank of America. Mariana, can you please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So I have two questions, one in U.S. government and the second one today from financials. So the first one is this. You mentioned in your prepared remarks reaccelerating U.S. government growth and opportunities across the board. But this is contrasting to what we have heard from the primes this quarter. They have agreed that more things are moving towards software, but they argue that the DoD has to figure out how to buy software, and they have to figure out how to sell software. From your point of view, how large is the change that is needed in this onward approach, but also, how large is the advantage that Palantir has in this environment where you have been selling software for a long time now?
Yeah, look, we've been doing this for 2 decades, as you point out, and I think that gives us a perspective of what was it like 2 decades ago and what is it like now. And it's wildly different, and so much has changed. Now, I don't want to underestimate how much has to continue changing, and I think the department recognizes that and is working on that. But to not acknowledge the progress, I think, would be disingenuous here. Unlike the primes who used to focus on hardware and now responding to software, we've always focused on software. One of the things about software is it evolves incredibly quickly. If you think about the software we were deploying to do the Afghan non-combatant evacuation operations and how much that evolved moving into Ukraine, how much that evolved moving into the current crisis in CENTCOM, it is evolving faster than procurement can procure it. And I think one of the unique strengths that we have is that we are investing and mutating and managing the software independent of the actual procurement actions. And that means that we always have software that's so far in the future that it will meet the moment that the DoD actually has.
As an addendum to that, the core thesis of Palantir was always the reality of a disjointed, violent world forces Pareto-optimal conditions on institutions. So I believe that everyone knows we have the best software in the world. It may not matter in a non-dangerous environment, but it did matter in Ukraine and Israel, and who did they buy? It does matter. Our software is running I'll never know what I'm allowed to say, but in among the most critical places in the DoD. If we are forced to fight a three-pronged war, you cannot do that even from a perspective of keeping our munitions ready without accurate software. So the more dangerous, the more real it gets, the more battle-tested and real your software has to be. I believe it's about to get very real. Why? Because our GDP growth is significantly better than China's. Now, I know the always wrong crowd says we then should get peace, but I'm telling you that the rational result of the rational consequence of that is our adversaries are like, America's going to be stronger tomorrow than today. It's like they don't have a GDP story because they do not build these systems as well as we do. They do not have the tech community we do, and they do not have the U.S. market like we do. Look at our results. And so as this becomes more and more dangerous, every company in the world, whether they're small, big, whether they're a startup, whether they're one of the largest primes, or whether us, is going to have to actually prove their software works on the battlefield. We love that. We want to prove, and we welcome and relish proving environments. If it was up to me, software would only be deployed at America and Western allies if it was proven on the battlefield. Unfortunately, for us, our adversaries are going to force that kind of adjudication. And for those of you who can't evaluate that because you don't have access to our software in the battlefield, though you could read the news and see what Israel has done and what Ukraine has done, look what's happening in U.S. commercial. You have a completely rational environment where we're deploying and growing the way we're growing with almost no sales force. And it's because it really matters. And when it really matters, the fact that they may not like my jokes or my habits, it will protect your life. And that's why we're going to do well.
Thank you, Alex. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you. So, I think inconceivable is the right word, in terms of everything that you produced this quarter. My question would be, are you starting to actually see an acceleration in terms of AIP customer engagements, not even just from Q4, but even starting 2024?
Handle that as the man on the front line.
Yeah, I mean, the answer is yes, absolutely. And I think, we're still very early, obviously, with AIP and the rollout, and very early in the market. But as far as, what we're seeing from customers, just see like kind of Q3 to Q4 results, and then what we're seeing in the conversations we're having with customers, the way that it's being adopted by the business, as Alex talked about, in the conversations we're having with customers, we're seeing that acceleration. We expect that to continue.
Also, just like we do these AIP conferences, I think we invited you and your team. we can't do enough of them. We're limiting the number of people who can come. It's like a rock concert. It's like, yeah, if you know somebody, we can get you in the back. We can get you backstage. You know, it's. By the way, for those of you who are evaluating our company, we are going to invite all of you to our boot camps. Please use, as you did, but like take a look at the software. It's like we're not arguing in the abstract or in a PowerPoint or according to what you may have learned at business school that is better. We are arguing that it is better. And there's no other way to show that but to do it. But to your question, yeah, like we're already overfilled for our AIP boot camp, and it's just we don't know how to deal actually with this demand, and so we're rebuilding the company. We have a lot of employees in Germany and France. I'm telling them it's time to pack up and come to America. I'm telling our hiring, we are hiring here. We are having, as I mentioned, a bonanza in people wanting to work here because people are quite frankly tired of working for people who seemingly only have an opinion when it doesn't matter and with products that may not work. We're looking at, I'm getting personally involved in the recruiting again to get more people, but exactly the right people. And we're going to scale against the demand, but it's a real thing.
Thank you. Alex, as usual, we have a lot of our shareholders on the line. Is there anything you'd like to say before we end the call?
I mean, we are fighting for the West and its allies to be stronger, and I very much appreciate your support. At this company, we think about our investors. Our most important investors are at Palantir. Our second most important investors are people investing their own money. And we relish your support, and it gives us a lot of motivation. I meet individual investors every time I go to a customer, basically. And I've had individual investors I've met at 2, 3 a.m. on a VTC, and I ask them, well, why are you working at 3 a.m. to make your enterprise better in AIP or Foundry? And they basically all say the same thing, because Palantir is fighting for my rights and my liberty. And we are fighting for your rights and your liberty, and we are going to continue to fight for that the way we do that, which is by delivering the best products to our allies, by hurting our adversaries, and by giving U.S. commercial the strength it needs to massively outperform every other country in the world. So thank you.
Thanks, Alex. That concludes Q&A for today's call.
Cool. That's the first time I've streamed a earnings call, and it was pretty interesting. For me, I'd say I have a little bit of a hard time when there aren't visual aids. And so the first part of that was a little difficult for me, but the rest of it was great. I enjoyed the table discussion and yep. And so what I might do before ending this stream, something that I'm very curious about is comparing this earnings with the last earnings. We are up about 19% in the after hour, now above this Fibonacci level at 1978. And so last earnings call, it went up about 20% and then continued moving higher. And so I'm very curious to see where it might go. And, as mentioned in the chat, I don't have very many shares. I actually just have one share. And when I first got into Palantir was at the very beginning, and I sold, somewhere in here, learning, to invest in stuff and learning a tough lesson there. And so what I would like to do for myself, and, maybe this will be informative for those who, want to diamond hand this, hold this for the long term, or if you just want to swing trade it, I want to try to identify where this might be going to, levels it might get rejected out on the short term, levels it might return to for the short term, and then continue higher, and then try to get an idea of where, a top might be, just like here on November 21st, it hit an all-time high. I believe that's, yeah, an all-time high of 21.85 before pulling back. And so for me, I don't want to offload all of my shares, which as of right now is just one, at a top like this, but I would like to trim on the way up, add on the way up, which will be increasing my average. But I want to be doing that based on these fib levels because I think that's a really interesting, intriguing way to approach the markets. I've been doing a lot. Pretty much all the videos now include Fibonacci retracements. And I just think that's a really nice way to kind of take emotion out of the market and to find levels to trim out of a position as well as to dollar cost average back into a position. And so following this earnings call that was on November 1st, it went up from that point to the high, let's see, about 50%, I believe. And so, and this is a measured, I'm actually not going to delete that. This is a measured move. We can think about it like that. From that run up, where was this before earnings? So right at that orange trend line. Really proud of that orange trend line. It served as a good guidance, and that was based on my independent identification, not using a fib level or anything like that. And I might actually adjust these to then have their let's see, numbers on the lines, so it's not so cluttered on the axis over here. And so looking at this, where might that go if it went up 50%? That would go up to about $24. From these Fibonacci retracements that I've done, there's one that includes after market closed out price action. So just during the earnings call, there was a dip down to here for whatever reason. And so I actually want to extend this. Where does that go? That's going too high. Let's see on this one if I extend that to 24.42. I find that intriguing. Looking for levels that overlap, that coincide with each other, that might be a nice way to identify where a top could be. And, then levels along the way getting there. And so looking at this last run up, I could do a retracement based on, just like I have done the retracement here, I could do a retracement from here. And that retracement did identify, like, what was the low today? 1648. This retracement, the 786, is at 1606. So that was a great time to add that 786 retracement right there. So I think that whatever price this does settle at, which I think is going to be in the $22 to $25 range, the 786 is going to be a good level to buy back in. But first we got to get to where might price be going. And so I'm going to take a Fibonacci retracement from, let's see, I want to make sure I get the high from right here, 1844, coming down to, you got to get the low, 1448. And these are all of the daily candles. And so I'm actually going to adjust that so it's just right. I like to be to the penny. So lock that. And see, this went up to, I have to actually adjust the number of levels here. That went up past the 1618. And so, and I don't need to include all of those, but which ones are going to be informative for where it stopped. So like right here, around $19. Let's see where that is. 50%? No. Let's see. Okay, so above 100. Yeah. So, this went up. Where did it come down to? That's what I want to be thinking about. So 100 below that, the 786 seemed like there was a good amount of consolidation there. And so that is something to consider. But then the bottom, I'm imagining, was going to be the 618. Also nearly support here, but didn't make it to that level. Really acted as resistance over here. 50% retracement is where this really came back to. And I guess, yeah, the 382, these are all getting kind of, yeah, so it did not make it down to the 236. So from this, retracement, I think that good levels to, I guess, buy a dip would be the 786. I don't think the 100% retracement is a good level to be buying the dip because, actually, no, I mean, right here, there was a dip buying opportunity after the initial run-up. And so, actually, we're not even, yeah, let's see. Okay, so I'm just thinking about that. Yeah, so from this, that's what we're looking at. So here, the 786 is, let's see, I want to add that back to this line. And that's based on the daily, so really I might just gray out this one that includes the after hours price action. Yeah, I'll leave it grayed out, unless that gets too cluttered. But really, I mean, I do my analysis on the daily, so I might actually just, no, I'll leave it there. There's a little bit of a bonus there, you know, seeing other levels that coincide with what we're looking at. So from this retracement, I want to be looking at the 786 because I think that is going to be the next, you know, dip buying opportunity on the rally up. And so that 786 retracement is at 1785. And so my average is lower than that. And so I am not going to be able to get my average down if I want to be adding on the way up. But if it does pull back to 1785, so really that would be on the downside over here. 70, yeah. So we would first see price going up to, so really 1835, that 100% retracement, but this is where it gets difficult because, I mean, it hasn't opened tomorrow, but if there is a little bit of a pullback, doesn't seem, I mean, it's going up 19% now over that, around $20. I don't think there's going to be any sort of a pullback. Let's look at this on the 4-hour time frame. Where is that? Oh man, I gotta adjust this. So yeah, that just continued higher with strength, so we really can't compare. But yeah, I mean, I think that this is, so yeah, I mean, I'm gonna have to figure out, you know, when the best time is to be adding, you know, as I can. I end up getting spread pretty thin, so I can't establish as big a positions as I'd like. But then at the same time, I'm less emotional about them, so that's good. If this measured move is repeated, that's a 50% increase. Actually, it shouldn't be based on percentage. So that was a from here to there, that was a $7 increase about. And so coming from here, a $7 increase, right around that, puts price at $24. So I could see this going up and topping out. I don't think it's going to top out at 22. If it does, that's a double top. That's concerning. Might be pulling back. Would be pulling back if that's a double top. So I could see this as going up to $25, 24 to $25. That's what seems like me. I mean, this one's crazy up here. Yeah, maybe I add the... Oh, look at that. There's another coincidence. So that's from this retracement that kind of, predicted this top here, or gave guidance on that top at 2084, which was $1.01 shy of the high there. And so, thinking about that, with this retracement, the 1618 being at $20, we're already there. This is also smaller. So maybe I'd actually want to do this retracement based on this high to down there. I think that would be better. Glad to see a couple people are still here. I think this is really interesting, and I think this is like, kind of, I have not been that good about this in the past, but I think this is, how you make trading, how do you make technical analysis really work for you is by taking a step back, looking at these levels. And yeah, so the low here. Actually, I already have this retracement done. I just graded out. Stupid me. But yeah, I was thinking to bring it over there. I think this is actually better because it goes from the absolute high following last earnings to the absolute low on the daily time scale. And so if I don't gray this out, what are some lines that stand out as far as, levels that we haven't seen? So this is going to be a little cluttered. I'm going to have to remove some of these levels. I really like, I think just the 786 is probably the lowest one I'm going to want on that, but then continue this higher. Okay, and I might actually make this following last earnings. I'm going to make it green so we can distinguish a little bit better. Okay, and so where does that tell us price might be going? Yeah, I think that realistically, with it at 1991 right now, up 19% in the after hours, and with what happened following the last big gap up, and that was, I don't even have to do a measurement. I can just put it on the candle. That was, 20% following earnings. And so that continued higher, and really, from that, pulled back to a 100% retracement. If we're opening up higher than 2185 tomorrow, I think that will be the new dip buying opportunity. If we're opening up around 20, I think that is going to be the new dip buying opportunity. So yeah, for me, I wish I had more shares. I believe in this company. I mean, it's just, you listen to them talk, and it's innovators, brilliant people. They're always viewed as crazy. And that's kind of how Palantir is viewed. And they're changing the game, not only as far as business goes, but also with government application, war. We're constantly in wars. How's it looking for tomorrow? So right now in the after hours, it's at 1992, up over 19%. I think that, kind of based on this previous run-up following earnings and where that was, price opened up below the shorter-term peak before that run-up. I think we're going to be opening up higher than it, so it's really kind of tough to be assessing relative to this drawdown. Relative to this drawdown, yeah, I mean, I think that basically $20, I think that's going to be the new floor, if not 2185, right around there, the previous high. Because, yeah, I mean, if we look at this on the 4-hour time frame, that's just a big green candle. I'm very curious about this wick down. But yeah, with the last earnings, looking at this on the 4-hour, it just continued up. And was that a previous? No, it was not a previous all-time high. That was a shorter-term high. I mean, I feel like $20. I think we're going to be opening above 20 tomorrow. If this is similar to last earnings call in the movement after hours. And this is on the daily now. I don't think 2020, I don't think 22 is going to be a cap, even though we have, the top here that's, going to potentially serve as resistance. That would then form a double top. I don't think Palantir is forming a double top, and I do think that this gap that's down here is a part of ancient history. You could look at Tesla. They've got a gap at $17, I believe. That's never being filled. Palantir is going to have a gap that will never be filled at $15 right here, $14.96, I think. But, maybe things change. But with AI, that direction, Palantir is just they're the kind of company the future needs, or is looking for, And man, I can't. Gotta adjust this axis here. So yeah, I mean, I think that levels that this is going to be bumping its head at. I mean, I think if it opens below 20, I think 20 is just going to be a psychological level, and that might serve as resistance. But I don't think it's going to be long-term resistance, and I don't think it'd be good to trim there. If we open up below 20, 22 might be a good level to trim, pulling back to like 2050 before continuing higher. And that just becomes kind of a dangerous game of trim when it runs up, buy back when it pulls back, which you'd then be increasing your average, but increasing your number of shares and doing that in kind of a stair-step fashion. And so I view that $20, really 20 to 2050, I think that's going to be a floor, if not $21.85, or right around $22. This measurement from the last earnings up to the top here was about a $7 increase. And so taking that from where we were at when we opened here would bring price to around $24. So I think between 24 and 25, 25.50, I think that's going to be a level that it's going to be bumping its head. A lot of these retracements coincide there. But I think that, with this retracement, it's grayed out. 27.31. That is based on, let's see, I believe, where did I have it? That is based on this retracement, so including the 4-hour price action. Hey, I'm the toughest. What's up? I'm just going to type up because there's this stupid heart emoji. I can't see everything people type. You think it will be at 22 tomorrow? I mean, based on what happened with the last earnings, a gap up and then continue higher, I think that, I think that at this point, I think that like current price, $20 or less, I think that could serve as a floor. And I think that we could be going up to $22 tomorrow. And I think that there might be a little bit of resistance there. There might be a little bit of consolidation. I suspect it will be bullish, and that bullish consolidation, and that this will continue higher to at least $24 over the next. Let's see here. Let's do. I might actually move this over to here so we can get kind of a. Actually, I need to adjust this so it does the outside. So it does the border. Because I kind of think about it more like that. And I might make this yellow so it stands out a little bit. Okay, and so from this, that moved up to that high over the course of 14 trading days, about 3 weeks. And so I don't know if I can copy that. And now I got to reproduce it. So if I were to do that from did I do that from that was the earnings day low basically, or right around the close. I'm just going to do it where it coincides with this orange line. I know the axis is a little screwed up. That's basically a 7%, a $7 move over the course of 21 days. Let's see. Sorry, this is just trying to 20. Was it 21 bars? I gotta look back. It was 14. It was 14 bars. So that's getting to right around there. So that is a measured move on it. And, you know, so this one is over $7 over the course of 14 trading days. This one, I just have right around $7 over the course of 14 trading days. That has a high of like, you know, here actually I'll adjust this more to right around there, right around 24 bucks. And so considering that, but you know, the setup here with it is just a little bit different. Yeah, I mean, I don't know. I'm getting ahead of myself thinking it's going to go past 24. But if it, yeah, but, you know, this is, you know, the retracement here, this is based on, so this one's based on the, yeah, so this retracement that I have over here is based on not the all-time high before earnings, but just the drawdown that took place before earnings. So it's more similar to this than it would be doing that retracement from over here. The interesting thing, though, is for this retracement, for following earnings, Palantir opened up below the 100%. Here, we're going to be, I imagine, opening up higher than the 100%. So I think that this is going to go on more of a rampage than it went last time because of that. And so because of that, I think that this will be going past 24. I think that $20 could be, you know, buy the dip opportunity, or not a buy the dip opportunity, but, you know, basically what price is trading at right now. And so, yeah, I think that this could be going up to 27 bucks, based on this like after hours retracement. I'll make that red because it's a little risky. I don't know, because it's this with this after hours dip. But yeah, let's see what other. Yeah, man. Oh. Yeah, but I think that, yeah, because right now it's up about 20%, almost 20%. That's what the move was, you know, including this price action on, you know, the green on November 2nd. And so if I look at this, I'm just going to do the 4-hour time frame. I prefer fewer candles. Yeah, so let's see. What am I doing here with this? So that's, okay, so November 1st. That's what I want to be looking at. 4-hour time frame. Oh, that's January. Yeah, I don't know why. It's because the axis is not auto. Okay, so here, yeah, I mean, so earnings were, yeah, I believe in the pre-market, or maybe or after hours on the 1st, or pre-market on the, I think they were pre-market on the 2nd. We see this big move up. Yeah, so it's different in that sense as well. If the last earnings report was released pre-market. But this, before open, just moved up and then continued moving up. And yeah, what's with this thing? A glitch? I don't know. But yeah, I think that, you know, I don't have a big position, a very small one. But I feel like it might be worth it for me to add at 20. So my average is still lower than it. And then trim, and trim at, corresponding to some of these levels with the expectation that this is going to go up to at least $24. An update on Coupang. Yeah, you were asked, I mentioned that I would yesterday. Yeah, so I mean, these are, I guess, kind of, before I go over to Coupang, I just want to say, thanks for joining. And these are basically my thoughts on Palantir. I have been doing, in case any of you are new to the channel, I have been doing Palantir videos on Mondays, but I did it yesterday because of earnings today. And so what I'm going to do, I end up doing a lot of tickers over the weekend, and it kind of saturates my weekend. So what I'll probably do is do a Palantir video this Friday, following up on these thoughts, and going over some of these levels. It'll be less cluttered. And, so I'll do that Friday. And so Friday is probably going to be my Palantir day moving forward. As long as it gets over 100 views or 100 views, I'll do weekly videos on Palantir. So if you do like the content that I produce, share it, and I will do my best. I should be able to do weekly videos on Palantir. And then also, more casual discussions in the live streams, stuff like this, which I do Sundays and Thursday evenings, and trying to do an additional stream in the week as well. And so I will follow up with this on Friday, but I think that this is just going to be going up higher. I think that $20 is probably going to be a discount, but it's not necessarily going to repeat what happened in the past. History, is a guide of the future, but with the understanding that things change. And so things definitely, are not going to be the exact same as they were before. I see just one comment here. I'm just going to type up. Bought at 92. Is that for Coupang? Or 1992? Yeah, I mean, once this stream ends, I'm going to be looking at the chart myself. But yeah, I will, let's see. I'm a little disoriented because I'm not used to looking at the 4 hourly, and I've just got so much stuff drawn up here. But yeah, I think $20, seeing how price goes tomorrow, maybe it's red on the day, and then that's, different than before. But $20 going up to 24, possibly 27. Yeah, I mean, and for me, I have a very small position. So if I end up red, if 20 is not the floor, 1992, yeah, nice. I feel like because it's gone up so much, like following last earnings, it did pull back lower to that gap. So I just feel like, if buying now after earnings, there has to be an exit and or trim strategy. And so for me, that's kind of what I have. I have a lower average, but I just have one share. It's very, very, no emotions with it. But for me, I want to have more than one share so I can trim based on these levels, and so I can always hold. And if it does pull back, it'll be easy for me to get my average down. And, because I believe in the company long term. So that's kind of my strategy. My strategy is very kind of not too exciting, small position, dollar cost averaging. Eventually, I end up accumulating big positions. I don't have one with Palantir, but I want to have one long term, especially if I'm covering it weekly on the channel. But yes, anyway, sorry. Nameless, I will switch over to, let's see. I'm actually going to adjust this so it's match with my window. And I'm going to throw up Coupang here. Yeah, and last night, I was at work. There wasn't much to do. I just edited the live stream to have videos out on it. So hopefully those videos are cool, and that's just going to maximize my output on the channel. But yeah, I don't really feel that anything's changed with this. I do think that 1350. Are these? Yeah. I didn't adjust the levels on this. Hopefully, I had this one on the last one. Yeah, I believe so. But yeah, 1350, that low. What was my... This is on the daily. I was feeling that this was at a bottom. Oh, yes, that's because of the divergence, the bullish divergence. So yeah, here we have this low in the price. And actually, I need to mark a line on this so I don't forget. That is what, I was seeing here. Actually, it's hidden bullish divergence, I should say, because we've got this downtrend there in the RSI. And we have this, from this low, we have a higher low in the price. And yeah, I mean, like a canoe, GOEV, I've done some videos on that. And I think during a live stream, I pointed out bullish divergence, and the next day it popped. Did retrace, so, that was a quick move type of scenario. But just now, I believe I had identified bullish divergence with it. I might just pull it up just to see what I'm talking about. But that is going to be in the video that I just put out, I believe. Oh, man, the auto. Yeah, and so here, this is bullish divergence. So that's the opposite, where you have lower lows in the price, higher lows in the RSI. Hidden bullish divergence is just the opposite, where you have higher lows in the price and lower lows in the RSI. And so with this, I noticed that, and then we saw this big pop. And that is, of course, a short-term type of move, tends to be, especially, with this stock. It's a lot of, pumping, swinging type of stuff. Coupang, I don't know, too much about the company. I know it's like the Korean Amazon. And so I don't know too much about the fundamentals or anything like that. I think that this is probably stronger than a small EV company. However, it is, it's not a US-based company, so you're dealing with geopolitical stuff. However, the U.S. does have a good relationship with Korea, so I don't see anything there. Whereas it's a little contentious with China and Taiwan, stuff like that. But yeah, I feel like, to me, I stumbled with this a little bit looking at the chart at first glance. Why do I think that this could be a bottom? I don't see any levels here. It's because of this hidden bullish divergence. And let's see, over here, and if we do pull it up the volume profile, yeah, there's that little shelf there because of this. I went over that in the video from the stream last night that I put out. Yeah, I think that this is a... I don't have a position with this. To be honest, I'm intrigued by it. I'm spread too thin to be able to establish a position in it. But, I'd be... this is why I cover too much stuff on the channel. I can't have a position in everything. But this is one where it's like, I'd be interested to pick up a share if it dipped to $13.50. Actually, no, I wouldn't want to do that. I'd be interested to pick up a share now and see where it goes. It's just one share, so very low risk for me. But, and just not necessarily putting my money where my mouth is, but having conviction in my analysis. Because, I'm going to forget about this until the next time you mention it in a stream. And so, yeah, this to me seems like the bottom could be in, and it could be going up to, 15 easily. I don't know about easily. It might bump its head, get into resistance there with the double bottom there. Looking at the volume profile, yeah, 15. So, for me, that's like, I could buy one share and I could make $1. That's, a swing. And that's probably to the extent that I would want to hold it. Just because this is, an exercise of, is this actually a bottom, a dip buying opportunity for a swing play? And I don't want to, I can't diamond hand everything. But that is, just from this Fibonacci retracement, or actually, no, that's not, I'm thinking about this wrong. But yeah, from this level up to that's a 10% swing, 11% swing. And so that's something that I'm intrigued by. And I feel like it's probably bad practice for me to be buying things during streams. I don't know. But I'm intrigued by this. And so just to have conviction in my play and to follow up on it, I think that I might pick up one share just to see how it does. And it's you might hear a beep. I don't know if you... Yeah, did you hear that beep? That was, I believe... Now I have a one share below $14, and I'm intrigued by 1504 and seeing where that goes. And yeah, so I'm intrigued by that. It's a cool chart with this divergence, which, it might not play out. It might bleed more, but then I'll reassess, and I'm not going to add any more until like another reassessment. And yeah. But a trim at 1504. Or, if it does create a new bottom, then I adjust that and whatever that 236 Fibonacci level is. Having conviction in the analysis, whether that is identification of the hidden bullish divergence and the potential bottoming signal here in that, with there being this little volume shelf here. If it does go lower, then I just adjust my exit point. But yeah, that's a cool play. I'll be intrigued by that, and I'm not too concerned about $14. But yeah, I might. It's not dark yet where I'm at, so I might close the stream down, go for a little walk, and then I'm gonna do. Monday has been, and actually I might pull up the calendar. This is something that I've been doing that. It's helping me to be more productive on the channel. All of these videos were just clips. So Rivian, Beam, which I don't think has been viewed once. That's kind of funny. Luminar, Coupang, and Baba. Those were all clips from the stream last night, as well as CLSK, Clean Spark, and Canopy Growth Company, CGC. And so I just took clips from the stream, made videos of them. The one that performed well from last week was... You got this little, I don't know what that is. It's a white. Oh, that's from here, I think from Chrome. There we go. Yeah, the only one of these videos that, or I guess two of the videos that performed well in last week, Monday, Palantir. I did that update yesterday before the stream that we're doing now, and then I will do an update on it Friday after AMC, which that's, I got to do weekly videos on AMC. It's my duty. And Palantir there, GameStop. So I've got to do GameStop. These are some videos that are tickers that I've covered in the past that didn't perform well over the span of a week, but they have received over more than 100 views. And so I want to do an update on SoFi. Hopefully I can get that in today. But I do have to go to work later, so I don't know if I'll get that in. And I've been on camera a lot. The past, 24 hours, really. So, or at least dealing with videos and stuff. So I kind of need to take a little bit of a break. But I'll at least get that GameStop video out. Tomorrow I will do a follow-up on Neo and Plug. Following day, follow-up on Tilray. If you do want to see Matterport, watch that video, share it. If it gets 100 views, I'll do that on Tuesday, tomorrow as well. And then Thursday, got Rocket Lab and Rumble in the schedule. Nano Dimensions and Peloton did not perform that well. And then as far as the weekend goes, Lucid didn't perform that well, but maybe it will get up to 100 views by then. But yeah, that's I'm just trying to populate this calendar and be cranking out material. Oh, and one thing that I might note, why I might not do SoFi today, especially because I do have all of these clips. Let's see. I'm just going to move Ed. Oops, I removed myself. Move Ed. I do have this book club right there. I need to read some more. I didn't read last night during my work, and so I might do that. And so maybe a video on gold when I feel like it. Yeah. So I should. Yeah. So what I might do is Thursday's stream. Maybe I'm actually going to add that to this little request tab. So I'm going to do GDL. And then so now I know that during Thursday's stream, I will go over gold, and then I'll take that in as a clip, put that out. If that gets 100 views, then I'll do another follow-up on it. But yeah, so that's kind of going to be my strategy in producing or covering new tickers. Taking requests, covering them during live streams, taking clips from that, making videos on them. If they perform well, like if any of these perform well, so far I think Baba is performing the best, then I do a follow-up the next week. But if I get too saturated on one day, like if all of these get up more than 100 views, I can't do all of that feasibly on a Monday. And so then I'd kind of spread them out and really just do them ranked by number of views, trying to get this channel to grow, and it is growing. It's remarkable. It's wonderful to be seeing that. And I think that this calendar organization is a great way to do it, at least for me and my organization. But, with that being said, I am going to close this down. So if you did enjoy the stream, make sure you like it. If you're not subscribed, of course, subscribe. And whether during a live stream or just on any video, share your thoughts in the comments and the live chat. Wonderful to be interacting with you all. You all give me great ideas for tickers to cover, trades to either go over or partake in. Usually, for me, unfortunately, my positions are small because I don't have a lot of capital. It's really, in some of the positions that I've already established. And so I'm waiting to see where those go and trying to execute enter and exit strategies based on this analysis that I do and build conviction in those plays. So then later, once I am able to trim on the bag holding positions that I have, I can start making more money on trades, putting more money based on the conviction that I have with this, analysis that I do. So yeah, I will put out GameStop today, definitely, maybe SoFi, but probably not. I'll probably prioritize reading over that. And then let's see, Thursday night stream. I'll have more videos out before then. And I will probably put timestamps on this stream so people can view it a little bit better if they want to review the earnings call and then my analysis at the end. But yeah, thank you so much for joining. I will see you all again live Thursday evening. And actually, I was thinking about it. I might stream. Let me know real quick in the live chat. Do you want me to stream tomorrow? Power hour, the last hour of the day, I could do that. I don't want to do it Wednesday before I do the Thursday live stream. I think that gets a little too close. But if you guys want me to do a live stream for an hour, last hour markets open tomorrow, I'd be happy to do that. So let me know. Nameless, if you're still there, let me know. You're most vocal. But tomorrow's good for a live stream. Cool. So I will set it up tonight. I will do a live stream, the last hour, markets open, and just continuing to go over charts. Maybe during that stream I'll go over gold and take a clip of that because, don't tell my boss, but I spent hours last night just putting those clips together at work. There was nothing to do, so who cares? But yeah, I'll see you guys tomorrow then. Yeah, Ron, what's up? I'll set it up so I can post a link on Twitter and on the channel, but it should, pop up in your feeds once I create that. But yeah, I'll create that tonight so it's ready for tomorrow. And yeah, I'll see you guys for that hour, likely streaming for longer just because we end up chatting about stuff, going over other things after the market closes. But yeah, I'll see you guys tomorrow. Have great nights. And I'm really excited about it. Yeah, see you guys tomorrow. All right, take care.